The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here at this noontime, noon till 1 o'clock, my new time. And pleasure to be here. Let's go straight to the market. The Dow is up 50 at 22,168. The E-mini that you're looking at right here on my chart, left side is the daily, in the middle is the weekly, on the right is a 120-minute chart, at least for now. What we're looking at is we've gone above the 2480.50 high. This is a new all-time high at 24. Let me give you the exact figure in the E-mini. 2487.50. The S&P only needed 4 points to go above the 2484 level, and it's done that. So this is really a very interesting moment in the history of markets for the simple reason that the Dow has just made successively higher peaks, all-time highs. The S&P is now confirmed. The NASDAQ is failing, but we'll see that there's a chance that it could still make that leg D up in the daily chart. Very interesting moment. S&P is up, futures up 950 at 2487. The leg D that you're looking at here on the 120-minute chart essentially says that at 2487, the 2482 to 2477 level will be key support in the short term. Let's get out of this 120-minute chart right here. And what I'd shown subscribers to my opening call this morning was that there was a pattern that I call the Chapman wave stalk leg formation. Here's the leg. It doesn't matter how many peaks it goes to the upside. Usually it doesn't go more than to a D or even an E, but it goes up. It can have successive peaks, but the most important thing, it's really like a straight up move, and I call that the leg. And then there has to be an oval shape. It can't be a rectangle. It's an oval shape that makes the sideways range trading boundary. I call it the oval pattern. And that's the body. Usually it goes to a D or an E, so that if it spikes above that high that was made at the top of the oval, in this case the body, right there at 2480.50, it starts the neck. And that's what we're in right now. So let me put that in. I'm using one hand just for now because I had a problem with my Skype. There it is. So that's the neck. And as you will see in a moment, that the neck can go on for a little bit, but when the neck starts to turn down, it creates the head. The head can be just a brief movement down, and then the beak starts, and that beak, and that's why I call it the Chapman wave stalk leg formation. Now, a stalk stands on one leg, has that oval body. You have to wonder sometimes, how on earth can it balance so perfectly on one thin little spindly leg with a huge body, and then you get the neck, and the beak, very often in the Chapman wave methodology, goes underneath the previous high, which is 2480.50, and it could go right down. If it breaks the body low, in this case 2457 round number low, then it says be very careful. All right, so enough with that. We've extended the weekly chart. I've got it in leg F right now. Now let's go to the Dow, so you'll see what I'm talking about. I have to get out of that, right? INTU. Good. The Dow is recycled. It's still in leg D, Chapman wave 5, spiraling higher. And leg Ds can continue for a little while, so you've got to be a little bit cautious. Leg D in the weekly chart, and leg E in the monthly. And here's the Chapman wave stalk leg formation in that monthly chart. Look at that. It's almost like a propeller shaft going from that oval pattern all the way up, and that's still the neck formation. So this is very positive, and the stochastic and MACD are very positive. Now, what we need to look at is, within the context of the markets, I'll get to a number of people ask, well, what will happen? How on earth can we pull back from these levels? So we'll discuss that in a moment. And it's very interesting. While we're not really wanting for my subscribers for the Dow to move this high, our long positions seem to be doing very nicely. So I'm not sure if we're supposed to complain here, but be it as it is, it's for the stocks so far, this is very nice action. So the S&P just broke out, and now it's gone to a leg E/C in the daily chart. Let me put that in. This is using the Chapman wave methodology, E/C, and the weekly chart has gone to a leg E. So we're getting close to some kind of a consolidation. Haven't we been saying that? At least I've been saying that for a while. And I've got a question not a question, it's really a statement that came. Kevin says, Basil, as I watch these perfect rotations unfold from sector to sector, I'm getting more and more confident computer trading is becoming a perfect science with the older trading community. I guess that's me. Not accepting it. Actually, I've been accepting it. I'm the one that discovered the rotational correction back in the summer of 2010. But it's how you trade it, I guess, is really the question here. Think about what you've been saying over the past 5 years and how perfect these transitions are from one sector to the other. No way could this be so smooth 15 or 20 years ago when humans controlled it all. Humans fumbled and tweaked as needed, allowing the 10 to 15% corrections. If you want a 15% correction, we need to hear about a Wall Street computer crash or hack job, not an oil issue in the Middle East, Kevin. I think Kevin has a very strong and valid point there. But human nature is still human nature. Things change, but they'll come back. They'll come back. And P. Austin again, please define human. Really, computer trading has been going on. Gosh, I remember back in they used to call it computer trading. What they used to, there was a term for it, and it was the same sort of thing. I think you're correct in the sense that the automation of these different sector rotations is much easier now. So, and someone says, who feeds the data? Yeah, but there's a certain point where computers do self-correcting and self-analysis. Going to put all the shrinks out of business. Anyway, so let's just go on with the market and say it'll happen. We will get a correction at some point, and then the computers are all going to be looking at the downside. In the meantime, the S&P only starts to become very negative if it takes out the 9-period moving average of 2,477, 13 points down from here. So let's just deal with the next thing, which is the QQQ. Here it is, the Qs, trying to tackle the last high of peaks. You remember, I kept saying, it's really unusual to go to all-time highs in the Chapman wave methodology by going to a peak C minus in the daily. It's so rare. Out of not thousands or 10,000s, I would actually say hundreds of thousands over the years of charts that I've looked at. It is rare. D, E, or F, or recycle G, yep, you could do that. But as a C, an absolute, there's no other way to count this, but as a C, that would be unusual. So I suspect that this week we will see a new all-time high in the QQQ series at 145.97 or higher. Unless something spectacular happens during the day to say, oops, rug pull, and everything turns down from being up. The Dow's only up 54. S&P is up 9. The Dow should be up at least 83. So we're not quite in sync. Not everyone's in sync. All right. So now what we need to do is we looked at the Qs. The IWM was lagging. Right now the IWM has had a nice move to the upside. 0.79% is one of the bigger percentage movers at 141.51. And it is up to $1.07. We'll come back straight after this break, and I'm going to see if I can get on the Skype rather than the telephone. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back, and thank goodness people know that my new time is noon o'clock till 1 p.m. Eastern, and I'm getting a bunch of emails from our regulars, and Paul had sent me an email saying, "Where are you?" at 11 o'clock, and I said, "New time, 12 o'clock." He says, "Oh, so sorry to hear this." I don't know why he's sorry. This is a good time at lunchtime. A lot of people take a break and want to listen to the market updates. Now, this is going to be very important. Let me just quickly show you something. The IWM is rallying, but this is not a rally so far of conviction. Leg A, I'm calling it a gray A in the Chapman wave, meaning it's under the last most important high back in the 144 area on the 27th of July. So I'm watching this closely. A couple of things going on. The semiconductor index, which we had taken small short positions in, that has rallied. It's rallied back right to the resistance level, and it's also at a peak C. But that peak C is underneath the previous high of 89.72 that was made back on the 9th of June. So this is going to be very important. Now I'm going to make it real clear. If by the end of the day, this is exactly the moment where a majority of people who have been trying to short the market or looking at least to get in are just throwing their hands up between yesterday and today saying, this is impossible. This is going to go up forever. I have to get in. Or this is impossible. I have to cover my shorts. And this is exactly the moment where you've got to say to yourself, stick to the rules. Stick to what you're looking at. Don't be flustered. Keep your tight stops. The most important thing is to have tight stops. But let's look at the IYT. Look at the transports. The transports right now had a rally over the last 3 sessions before today. And then today made a new high, but only after pulling back quite sharply. And this is saying, yeah, this is an attempt in the transportation index to have some kind of a bounce here. And at 167.67 on the iShares transportation average ETF, what I'm really looking for is this very ugly candle, this kind of gap down candle of the 27th of July with a high of 170.28. I don't think in this move right now that we're going to get to 170, but we'll see, because there's a trend line, a moving average right here. This is the 50-period moving average. Let me show you right here, 50-period moving average, exponential that is, right here, and it's trading, that would be at 168.72. And right now, the iShares IYT is trading at 167.67. A good recovery. If you look at the 120-minute chart, you'll see that it's gone to an A, a B, a C, and it's in a D right now. If this holds towards the end of the day, if it holds these gains up 0.32, and you see the 200-period moving average, if it gets closer to 168.20, then the 200-period moving average of 169.45 becomes kind of a magnet. But I'm looking at this market right at this particular moment. Questions coming up. Crude oil, yes, I'll look at it right now. Crude oil is, I'm a little behind on crude oil, but this is what we're looking at. It's under that peak C, but that was a recovery rally. And that peak C went to the 200-period moving average in the 50.20s, pulls back to the 48.60s, and right now we're at 49.38. And the weekly chart is improving, but by Wednesday at the latest, midweek, you've got to see a pop that gets really close to taking out the previous high of 50.43 to start leg C in the weekly chart, which would be very positive, and leg D in the daily chart, which suggests that the 200-period moving average at 50.28 will become support in the short to a little bit more intermediate term. Let's look at USO to get a better feel. Yep, holding the 9-period moving average. We were long at 10.19, it's at 10.11. We got stopped out with a tight stop. I'm looking at this and I'm thinking rectangle formation that says, yep, there could be a rally towards the 200-period moving average of 10.37 in the United States Oil Fund ETF. Now, this is going to be important. The TLT pulled back quite sharply from a peak C1, C2 in the Chapman wave. And what has happened is the weekly chart suggests that it's going to be a real struggle to break to a new high. The daily says that the arch formation, let me just move this over like that, that the arch formation really is much more active than the cup formation, but we won't know for another couple of days. I'm just going to make it real simple. If the TLT, the Lehman 20-year T-bond fund, trading at 124.44, down 63, closes. It can go underneath, that's fine. But if it closes below about 123.87, that suggests that the TLT is going to go lower, and you'll be watching to see if the TNX goes above. In other words, it has that inverse, the same as the TLT. This is the cup formation after a so far successful lowercase h pattern, but nothing's going to happen until the TNX goes above 2337, 2.327%. Now, let's look at high-grade copper. High-grade copper has just extended to leg D. There's that same pattern. We've seen it over and over. This is Chapman wave stalk leg formation. Look, long leg, oval body, breakout to a leg D. Leg D in the weekly chart, leg D in the monthly chart. This is in the daily, in the 120-minute chart. I don't know if I can do that quickly. Yeah, I can. A, B, C, D. This is leg E. I'm calling it in the 120-minute chart. Excellent move in copper, breakout. MACD is good. Stochastics at 87%. So far, that's good. But D is where you start to get a little nervous, saying, hey, if it pulls back sharply, 2.88 better hold, and it's at 2.94 right now. Couple of questions that came up. COL, I hope I've got that all notated. Yeah, this is a leg D, a gap up on Monday and an inside bar today. This is a gap up to a leg D in the daily of COL, Rockwell Collins defense stock. It's down $1.55 at 125.52 with a high yesterday of 128.43. But it's only, I could call this an alternate count. I'm inclined not to do that right now. I'm calling it C, and that leg C for the weekly chart is with a very strong technicals, and I'm not going to change anything there. I think that that's very good action, and leg C in the weekly. And you remember I said I thought the defense stocks because we've got a president in place that many people think is really the active president, the one that will be quicker to go to battle then our previous president of peace, actually had the defense stocks skyrocket 400% or more. We'll see what happens here, because these have, since the November low, these have had a spectacular move. So not counting it out. But if you look at Rockwell, yes, let's see what happens in the next week. If it takes out 120 support, then it's over for now, at least short term. If it breaks into the 130s, it's just a spectacular move. It's just spectacular. And we've got Raytheon recycled. It's in leg C at this point. I'm calling it C at this moment for the daily, leg F in the weekly, and we've got leg E in the monthly. So yeah, these defense stocks have actually done extremely well. So the Dow's up 39, S&P's up 7.80. Basil Chapman, the noon to 1 p.m. lunchtime hour. I'll be right back after these important messages. And
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had a question about NCLH, Norwegian Cruise Lines. Boy, these cruise lines have been cruising. Amazing. This is just gapped up. I must be earnings is up 358 at 60.23. A beautiful move to the upside. Leg D, we'll come back to it because I want to go to Paul in San Jose, California, and we want to look at. Hi, Paul. How are you?
Hey, Basil. I'm doing great. How you doing?
Well, thank you.
Awesome. I want to take a look at the SAS, the 3 times long, the financials. I'm in this thing at about $50, and I have a good percentage of my positions still left on. it's been a little choppy getting up here, but I was wondering if you could give me your analysis and if you think the XLF will get back to its previous all-time high on the monthly chart.
Okay, so let's do this. We're looking at the XLF because that's the root. That's the S&P Select Financial Spider Fund. It's trading at 25.49. 25.49 was the high yesterday, and today's high is 25.59. I've got it in a leg F, but the MACD is good, and the stochastic has just started to flatten rather than spike above 80% to 87% and then start pulling back. So I have to consider that the 9-period moving average at 24.26 to the next level of support, which I would put at about 25, let's call it 25, round number 25. That's going to be important. Now, when you ask about the all-time high, well, let me just show something here. The all-time high was back in, let me see, was that the all-time high? This one I've got, yeah, so the all-time, you're talking about the all-time high back in June of, at 30.98, and that was in 2007. Yes, I believe that it will, because mega bull markets like this tend to take key indices to all-time highs. What I am looking at, and this is going to be important because for my subscribers, we've had this as a buy. It hasn't come down to the buy level for a while. At a low, we have it at a lower level. We would like to get in. We've had it before, but we'd like to get back in at a lower level. Most importantly, what I'm looking at is there's a relationship that many people talk about, at least many of the so-called experts talk about, and they say that when yields go higher, that's when these bank stocks, the financials, and particularly the regionals do very well. Well, the regionals didn't do very well at all when there was that sudden spike to the upside recently. They did okay, but they didn't really break out per se. And the XLF did okay. And what you've done, and you said it very well, you said it's gone up even though it's been choppy, because what it's done, it's made like a stair-step move. It makes a leap to the upside, and then it takes weeks, and then it kind of goes down, and then it holds support, and then boom, before you can do anything, it spiked to the new level. But you can see that these, if you're looking at the daily, whoops, excuse me, a sneeze coming, sneeze gone. Thank you. You can see that the last series of new highs has gone quicker and quicker. And even the one that happened today happened after only one bar consolidation from the peak E, 25.49. So this is what I'm going to recommend. You're looking at this, I don't want to speak for you, I'm asking you the question. You're looking at this as more as an intermediate term buy and hold that you would prefer not to be going in and out of, is that correct?
Correct.
Okay, but you do have the most, the speediest mover of all, and that's the FAZ, the Financial Bull 3 times shares. So that means that it's often quite difficult to hold a 3 times long or a 3 times short in this kind of market because moves are very quick, but both ways. In this particular instance, you can see by the black line in the daily chart how this FAS trading at 53.86 up 0.49, the 3 times long, the XLF is essentially walking the 9-period exponential moving average, except this morning it almost touched that 52.93 low. The low was actually 52.96, 3 cents higher. And it's suggesting to me that if you start to see 2 out of 3 closes below the 52.90 level, that's going to suggest that it's going to start a digestive phase. So now, this is what I would, because you've called me to ask the question, it means that it's kind of on your mind in terms of having a little bit of anxiety, only because you don't want to give up good gains, and at the same time, you don't really want to lose a good position you got into by getting out too early. So the best way that I can think of is to say to you, at 25.51, having gone to a lower low today than it was yesterday, and then spiraled to a new recovery high, the low of 25.30 that was made this morning, I would just keep it in mind. And I would say I wouldn't, because what I said to subscribers in my webinar this past Wednesday, and I'll be doing one, not this Wednesday, but a follow-up webinar a Wednesday a week, is that we're looking at the financials, and as a long-term position play, my thinking here is that in the rotation through the different sectors, in a sense, this is still, even though it's made a spectacular recovery, going from the 12s to the 20s, essentially over doubling in the last couple of years, this is still, the financials should still go to all-time highs over the period of this mega bull market. So I don't want to say to you, hey, whoa, this is great leg F, this is where you got to be careful, put a stop. I'm going to say to you, you've had the patience to hold it. The only thing I would say to you is that you might want to take a little bit off the FAS and transfer it into the XLF, almost as if you're playing two parts to the same side. And the one part is a slower mover, more conservative, but it gives you a lot of room. And the other one says, if it starts to pull back, I don't have to tell you how quickly it can pull back. So I'm just saying to you, I like what I see, but the fact that you did call to ask about it says that you've got a tinge of anxiety, just saying, this is really good. I don't want to give it up. I'm saying, regardless, I would keep my two. What are you in at on FAS?
At 50, let's see here, about $50, I believe.
You see, $50 is really nice because it gives you quite a good cushion over the next 2 weeks. But at the same time, I am saying to you that if it was an XLF position, I'd have kind of a different attitude because of the percentage that it moves if it starts to come down FAS. So I'm just going to say to you, you know what? If you are going to get out at all, you either want to get out right here closer to the highs, and all I'm saying is you might want to take a little bit off and say, you know what? If it pulls back, I'm going to transfer some of that money into the safer XLF, and then I'll keep my FAS position. And the only reason why I say that is that I don't have a signal yet. The monthly chart is really strong. Weekly chart stochastic is at 87%. MACD is not great, but it's good. And the daily chart says, if at 87 there is a pullback underneath 25.17 in the XLF, that stochastic is probably going to go under 80%. So all I'm saying to you is keep an eye on it. Let's talk again maybe in a day or two. But in the meantime, if it goes to 25.30, you might want to just take a little bit off as security. That's all.
Awesome. Hey, Basil, thank you so much for your help. I appreciate it.
Thank you very much for calling.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So the question is, and platinum is in leg E, getting a little bit stretched here. It's been a spectacular move going from the 890s to the 970s. I mean, you don't see that very often on the upside for platinum. And the weekly chart is in leg A. So this is a very nice move. I think it's getting a little bit stretched, but the technicals are still great. And it says that the 961 to 958 level should hold as key support. Let me just run backwards here. UTX. Oh, UTX is going to take talks to take to buy out COL. Oh, okay. Well, that makes sense. So my Dow Quartet. Talk about old school and new school. My Dow Quartet is still acting very poorly. Look, UTX has pulled back quite sharply from its peak E high in the weekly chart, leg C in the monthly, and that 118 area should hold. This is 118.73. Triple M is, let me just check my time here. Triple M is trying to bounce, try to fill the gap, that huge gap down from earnings, but isn't acting all that well, but not acting badly. It's just kind of stuck in the high range. IBM, ugly chart. IBM down 94 cents at 142.50, and that's one of the reasons probably why the Dow's lagging the S&P. And GE, let's see what GE is. GE is just kind of stuck in this low range, just trying to work its way in between. It's just a low-level consolidation, let's put it that way. At 25.83, it's up 20 cents for the day. That's good on the day, but it really needs to break into the gap and over it, into the 26.20s, 30s, somewhere around there. VRX at earnings. We've followed this periodically. VRX, nice spike to the upside, is trading at 16.55. Had made a peak F double top in the daily. The weekly is still only in leg B, peak B. This is attempting a real good attempt at trying to form a base. It's going to act well later on, and this is just the period where it's got a lot of work to do to really establish some kind of a base of support in the 1652. It mustn't go underneath $14.80. That would be very negative. So far it's holding quite nicely. While looking for a top in the Dow, getting run over, yes. What safe way to play? I'll talk about that in a moment. Let me just do the others. A safe way to play the Dow, the positioning, I don't... if this is that acceleration phase that I've been dreading would happen right now, there might not be any rest for the wicked. It could keep holding and rotating and just moving higher. But I need to talk about it in another way. I don't want to just make a bland statement like that. I might even have to take tomorrow to talk about it, but it's a good question. Sarah wants to know about X, US Steel. up today, up 26 cents at 24.45. This is nice. I'm a little nervous about it because I'd like to be buying for subscribers, but at this particular point, I don't. It looks like it's just in a choppy sideways move after that big move up and then the plummet to the downside. Good action. Weekly chart says 200 period moving average right here is somewhat resistance. In the daily chart, it's at 25.41. I just have to hold off. I can't say anything right now other than if it goes underneath 22.30, that's very negative. And if it goes above 25.50, I'm going to have to say, you know what, it's in play, and you can take a position. But other than that, I'm just you can just get chopped around up and down with these steel stocks. So that was that question. JP Morgan. JP Morgan, leg D, right at that resistance. Not sure what's happening to the throat. It's right at resistance. It's in leg F/B in the weekly. I'm going to have to call it B. It's just acting so well. And leg C. So JP Morgan up 55 cents at 95.55. You can see the cup formation right there. It broke out. If it closes above 94.51, I'd have to say that's something to take note of. That's the lowercase h pattern inverted like the Y, inverse Y, and that would be a negative breakout if it was upside down. In this case, it would be a positive breakout. It's in leg D. All I can say is acting pretty nicely right now. Bank of America, BAC, spoke about this in my webinar. And folks, the second webinar is we're looking right now, we've got positions on, looking to see how they trade, what's working, what's not working, and that'll tell us by the end of the week, going into the first part of next week, where we are and whether or not that acceleration phase that I was talking about is going to unfold, or are we really getting toppy? And that means that I have to look at, right now, I'm going to have to look at the VIX index. Look right here, VIX, typed it in. Let's just type it so that it shows up as a chart right there. $VIX.X, there it is. Yeah, that VIX index is holding way above the 8.84 low that was made. It made, what was that, a Thursday or something back in on the 26th of July. It's holding very nicely and saying, you know what, fund managers are starting to nibble at this. There is something here. And that's the reason why I'm looking at this. Now, the question I had was a follow-up question is on the SMHs. Am I still negative? Well, the resistance, I could have gone higher for a stop, but I didn't. I wanted it really tight. That stop, it stopped exactly on the trend line. But it's at a peak C in the daily, even though it's what I call a gray C. And the MACD hasn't turned positive, but it has moved up, and the stochastic did turn positive. And the weekly chart is actually holding very nicely. So I'm just going to make the statement flat out that as long as it doesn't break into the 88.20 area, I think that it's going to struggle. NVIDIA is part of it, and NVIDIA has earnings coming out soon, I know any day now. And it's, look at this, spikes up to a leg E/B over the 170.05 resistance of yesterday. Went to 174.56. Let's just get that out the way there. And that's a pattern. Look, the MACD is not that great, but the price is moving. Stochastic's lousy. It's under 80%, yet the price is moving. I don't like to fight that. And all I'm saying is that NVIDIA is a spectacular company. Leg F in the monthly chart, an alternate count here in the weekly, and it says really the alternate counts failed. It has to be a leg B, and that's really positive, and says that any major pullback would make the 138s really important support. So I'm looking at NVIDIA, I'm saying, you're going to tell us a lot about what happens when your earnings come out. Maybe the earnings are great, but they can't keep it up. In the den, RACE, that is a Ferrari, new high, doji high, leg E. in leg F/B in the weekly chart, only a leg B in the monthly. That's suggesting that the mega bull market has a long way to go in 2017, even if we get a very nice correction. So let me just put this little package together. So I think I've covered all those questions. Yes. So we've got the final break coming up, and then I'll have that little section going to the end of the session today. So let me use that, and I'm going to tell you what I'm looking at, and I'll run through the numbers exactly the way I'm seeing it.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi, folks. Don't forget, great programming coming up. You've got Steve Rhodes, you've got Dave White, Tom O'Brien again. Today's Tuesday. You've got Andy Hecht. So, my new time, I'm pleased, almost all my regulars texted me, and we've got one right now. Warren says, I own this a lot lower from the 2008-2009 crash. Now I am up at least 100% long-term. Where do you think this is going on a monthly chart? WTR is a widows and orphans stock that seems to have left the widows and orphans behind. Thinking of letting go, Warren Denver, listener. So, Warren, WTR is, first of all, congratulations. That's fantastic. Aqua America. Now, I love the water stocks. This is probably some kind of infiltration or diagnostic, but it's had a peak E in the weekly chart at 34.41. on the week of the 16th of June of this year. It's making a U-shaped pattern, trying to get back. It's in leg D in the daily, trying to get to the previous D of 34.39. Monthly chart looks great. Warren, I think this is going to go above the high that was made, or close to above the high in this particular phase of 35.83 that was made back in July of 2016. It's in leg B, gray B. It'll be a gray C if it goes above 34.41 this month. But it is in the sector in my webinar, and folks, you can still listen to the webinar. I especially did it so that it was a general, it was an overview of what we're looking at, why we're looking at it, etc., different stock sectors, etc. Because every day we're going through stocks that we actually own. One came out with earnings today. It went up and then it went sharply lower, and now it's up again. This is what we're looking at. What is going to possibly work over this particular phase? We've got an auto stock. We've got a retail. Can you believe it? A retail stock. So all I'm going to say is that in this particular sector, I've spoken about this sector in my webinar. I thought that would be this. Hold on. I don't want you to do anything right now. Let's talk about it in another couple of days. I love it. It's acting very well. So, folks, make this real simple. If the Dow closes negative today, it's really a strong hint that you're going to get a pullback over Wednesday and Thursday. If it suddenly springs back, it says, nope, not just yet. But I think we're looking real toppy on a near-term basis in every time frame we're looking at.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.